I am Devlin Steele, Director of Education at Augusta Precious Metals. On Monday, we said to expect inflation and interest rates to dominate the economic news cycle, and that's exactly what's happening. Before we begin, remember to like this video and subscribe for more economic updates. On Tuesday, the Labor Department updated us on the Consumer Price Index for May. Headline CPI increased just 0.1% for the month, even lower than the modest 0.2% increase projected by economists. Year-over-year CPI slowed to 4%, down from 4.9% in April. Annual CPI is now at its lowest level since March 2021. The story with core CPI, which excludes food and energy prices, was not quite as upbeat. On a monthly basis, core CPI increased at a 0.4% pace in May, identical to the rate in April. On an annual basis, the core number moderated slightly, down to 5.3% from April's 5.5% pace. The following day, Wednesday, the Labor Department was back with the Producer Price Index for May. Those figures indicated that even greater moderation is taking place among wholesale prices right now. On a monthly basis, PPI fell 0.3% in May, beating projections of a 0.1% drop. It's the fourth time in the last 6 months that monthly PPI has declined. Year-over-year PPI rose 1.1%, better than the 1.5% rate projected by economists, and a sizable step down from April's 2.3% pace. However, as with CPI, PPI demonstrated a little more stubbornness at the core level last month. On a monthly basis, core PPI increased 0.2% in May. On an annual basis, core PPI rose 2.8%, slightly lower than the 2.9% year-over-year rate that had been projected. All this news on the inflation front brings us to the topic of interest rates, which, as usual, were front and center on the Federal Reserve's agenda during the 2-day policy meeting this week. As had been widely predicted, the central bank decided to leave rates unchanged at the conclusion of their meeting on Wednesday. It's the first pause in the last 11 meetings of the Federal Open Market Committee and keeps the target range at 5 to 5.25%. Despite the decision not to touch rates this time, Fed policymakers right now do expect 2 more quarter-point rate hikes before the end of the year. But how certain those increases are remains unclear. In the post-meeting statement, committee members clarified that economic developments going forward will determine how they proceed from here. That's all for now. We'll see you again next week. This is Devlin Steele for Augusta Precious Metals, signing out.